When I was a young kid, my family went without insurance for significant periods of my youth. Not because we didn't want to, not because we didn't think it was a good idea, but because our family really couldn't afford it in the light of all of the other bills that my parents had to deal with on a single working class salary for the bulk of that time when I was a kid. We knew it was dangerous, but what we had to do was mitigate significantly our activities to mitigate our own risks. So, for example, I did not play organized sports because in order to play organized sports, you needed to be insured. Of course, I mean, why wouldn't you be? If you play organized sports as a kid, there's a good chance you're going to injure a toe or a thumb or an ankle or a knee or something, and it's important that you have an ability to have insurance to pay for that injury. Well, what happens if the insurance is so expensive that you can't afford it or it's not offered? In my case, it was an affordability issue, but there weren't very many people who offered individual policies in the United States back then. So what ended up happening was that people like myself just couldn't take as many risks, couldn't play those organized sports, had to be careful even in things like gym class. Now, you may think, well, that's not much of a sacrifice, right? You still got to run around like a kid. You still did other things. You just couldn't necessarily go and participate as fully as you may have otherwise wanted to. And I wasn't the most athletic kid in the universe, so it wasn't like, the world missed out on the next Michael Jordan. But the point is, the lack of insurance changed my family's behavior. It changed my behavior. If we start seeing large sections of our economy uninsurable or unaffordable for insurance to be provided, how many families are going to have to start taking big personal risk mitigation steps that are not going to be good for the economy? You may think this is laughable, but think about it for a working class family that can't afford two auto insurance policies, but they could afford two cars in any other circumstance under any other situation. But if they can't afford the second policy, that becomes a one car household. And that can have very significant impacts on that family for their economic viability of getting to work. Or, worst case scenario, they take a humongous risk. They choose to go uninsured, and goodness forbid if they get into any sort of vehicle accident and either they're out all that money for the car or there's a liability because they caused the accident and now it's going to come all back on them. The point is, it is a huge impact. And we're just talking about one family. Now multiply that by all the working class families that have to make a decision like that, and you've got a big problem. Let's talk about homeowners insurance for a moment. What happens to cities and towns across America if all of a sudden significant portions of those towns literally cannot get a private insurance company to write a policy, or you have policies available, but homeowners literally cannot afford to pay the premium, or the policy is so junk to make it affordable that people take on 10, 15, $20,000 deductibles so that the next time a storm comes through, their entire budget for the next 2 years is wrecked because they have to repair a roof or blown out windows or siding or who knows what will happen during the course of a given storm. This has major implications for our economy if large numbers of working class families, even middle class families, all of a sudden can't afford basic insurance. And now the normal risks that we all take, they're either going to mitigate their own risk in a way that takes them out of the economy in a significant way, or certainly pulls money out of the economy, or they go and take humongous risks by going uninsured, at least on their vehicles where they can, or they forego home buying altogether. This becomes a big, big problem. And we know this because before the healthcare laws that exist in America today, we know millions upon millions of people went uninsured. Even today, with more widely available insurance policies subsidized by the federal and state governments, people still go without insurance because they can't afford it, not because they don't want to. And we know what they do as a result. When they didn't have health insurance, they avoided going to the doctor. That was their risk mitigation. Since they didn't have an insurance policy to fall back on, they just didn't go, and they allowed little issues to become big issues. And we also know that when you have no insurance, medical options become far more limited for you. And again, that can have a direct impact on your personal economic and societal liability and viability. The point of this entire conversation is to simply raise to consciousness for all of you that I think this is a very important topic that nobody is talking about. And I think we're probably years away from the peak of this. But almost every week over the last year, I have had somebody in my social circle talk about this issue of rising insurance rates and how it's getting pretty expensive for those who have a little bit of money. But for those who are really just getting by paycheck to paycheck, this is really starting to force some difficult decisions. And those are economic in nature for those individuals. But if you widen out to the societal scale, these are much bigger concerns. And the more that insurance premiums rise to deal with the increasing risks of our world, the more money that pulls out of working families' pockets into their insurance premium just to mitigate the risk of living and driving. And the less money they're going to have to spend on everything else that they do. And the bigger risks they're probably going to be willing to take that could cost them even worse down the road.